Welcome to the 9th Annual Paul D. Merrill Business Ethics Lecture. I'm Michael Daly, Chair of the Department of Business here at UNE. At this time, I'd like to bring Dr. Danielle Rippage, President of University of New England, to the podium to introduce our speaker today. Thank you.
I'm short. Reminds me. Good afternoon, everyone. It's really a pleasure to join you today to celebrate this wonderful lecture and the legacy of our dear friend and former trustee, Paul D. Merrill. PD was a friend to UNE for a number of years, and this is the 9th annual Paul D. Merrill Business Ethics Lecture to be hosted here at the University of New England. It's hard to believe that a full decade has passed since we lost PD, and many of the people in this room can attest to the impact that his life had on the University of New England, Portland, and the state of Maine. Through his deeds and his words, he encouraged those who knew him to be the best possible versions of themselves. And I would like to think that through this lecture series and the wonderful speakers that we have brought to our students, PD is continuing to challenge us to follow through on the noble ideal to be the best possible versions of ourselves. I would particularly like to thank and recognize Sandy Goulden, PD's wife, and longtime member of UNE's Board of Trustees, as well as their son Ethan, seated in the front row here with us. Thank you and welcome. And Pete, I know that Ethan will love this, but we've watched over that 10 years, Ethan's gone from this to, people are now peeking around your head, Ethan, to hear the lecture. But it really is, has been sort of a family tradition here to come together. It was Sandy's vision and support that established this series in 2008, and she continues to provide guidance for each of our events. And we really thank you for all you do for UNE, as well as this special lecture. I'd also like to welcome our other University of New England trustees who are joining us, as well as the faculty, staff, and students in attendance. Whether you aspire to a career in business or in any other field, you will supply our world with its next generation of leaders. If you dedicate yourself to making socially responsible choices, you will create not only the best possible version of yourself, but you will help us create the best possible world for all of us. From an early age, P.D. Merrill understood the influence he could have on the lives of others. And he understood how he could magnify that influence and even further extend it by encouraging others to join him. While still a student at the University of Minnesota, and I think this is really prescient as we see what things are happening on our campuses today, PD helped create a dining cooperative. He launched a students' housing cooperative. He and his peers pooled their resources and in so doing took control of what they were eating and where they were living, and they made their community stronger. Next, PD helped organize student co-ops at other colleges, not because there was anything special in it for him, but because he knew it could help other students improve their quality of life. These experiences led PD to a position at a company called Technicorp, an international developer of housing cooperatives. With Technicorp, he helped manage co-op apartments throughout the United States. And of course, he came back to Maine, enjoyed a storied business career here in our community, and worked in the family business, Merrill Transport Companies and Merrill Industries. But this glimpse into his early life as a student, I think, illustrates the underlying principles that always guided him. As he rose in the business world, PD never forgot his commitment to being a responsible citizen. And that brings us to today's speaker, Joseph F. Keefe. Joe is the president and CEO of Pax World Funds and its investment branch, Pax World Management, and subsidiary, Pax Ellevate. Under Joe's leadership, Pax World has become one of the leading innovators and asset managers in the rapidly growing field of sustainable investing. As Forbes magazine recently wrote, as president and CEO of Pax World, Joseph Keefe provides an opportunity for thousands of investors to put their money where their values are, to the tune of more than $3 billion globally. That is a mission, I think, which our friend P.D. Merrill would be very proud of. As Joe also has written and spoken extensively, he has helped people understand sustainable investing and women's empowerment. He is co-chair of the Leadership Group for the Women's Empowerment Principles, a joint program of the United Nations Global Compact and UN Women. He serves as the board chair of Women Thrive Worldwide, a nonprofit organization dedicated to shaping US international assistance and trade policy to help women in developing countries lift themselves out of poverty. In 5 different years, Ethisphere magazine has named Joe one of its 100 most influential people in business ethics. So we have a true leader here today. In 2012, Women's E-News named Joe one of the 21 leaders for the 21st century, making him the sole male honoree on that list. And in 2014, the United Nations included Joe among 5 recipients of the Women's Empowerment Principle Leadership Award. And in 2015, just last year, the Financial Times named Joe one of its top feminist men. Now there's a sentence I never thought I'd say. That's impressive. Top feminist men. For his work in helping women to succeed in business and in life, he has truly, truly blessed us. I could go on, but I think you get the picture, and this is a gentleman who spends his life trying to improve the lives of others. Please join me in welcoming to the University of New England, Joseph F. Keefe, who will present Investing as a Social Change Strategy. Thank you.
Thank you, President Rippish. Good afternoon, folks. It's a pleasure and a privilege to be with you today and to have been honored to be asked to deliver the annual Paul D. Merrill Business Ethics Lecture. And I want to start by saying that I had the privilege this morning of, actually at noon, a luncheon with some of the business students from your senior business students from UNE, and I cannot tell you how impressed I was by the caliber of these students, the depth of their questions, their understanding of business and finance issues, how engaged they were in the discussion. And I speak at a lot of colleges and universities, and I cannot tell you, as I said after, I know they were undergraduates, but they certainly seemed like grad students to me. So congratulations, you're doing a great job. As President Rippert said, I'm going to speak this afternoon on a topic that is called Investing as a Social Change Strategy. And I imagine if you're like me, most people today are somewhat frustrated, to say the least, by the state of affairs globally, as well as how things are going here in the United States. Climate change, terrorism, war, poverty, refugees, human rights abuses, the list goes on and on. And although the world always has and always will have problems, there is in some quarters today, I think, a sense of things getting worse rather than better, and that we perhaps have lost control or some sense of control over the march of events. Another defining characteristic of our age, it seems to me, is that many have lost faith in the capacity of our public institutions to respond to those challenges and find solutions. Regardless of where you look today, governments are weak. The public sector just isn't what it used to be. It may be a failed state in one part of the world, or bribery and corruption in another country, civil war someplace else, or right here in our own country, a level of partisan gridlock that has seemingly brought Washington, D.C. to a standstill. So we live in a time when people are perhaps a little less optimistic, perhaps a little bit more cynical, perhaps having lower expectations because we see governments and other institutions failing to respond adequately to the challenges confronting them. And yet, at the same time, I would submit to you that none of the challenges we face today are any bigger than the challenges we have successfully faced in the past, be it World War, the abolition of slavery, the Civil Rights Movement, ending apartheid in South Africa, women winning the vote, landing a man on the moon, the fight for marriage equality. It is my strong view that the problems we face today are as solvable as any problems we have confronted in the past, and that we as individuals still can make a difference, that we as individuals can still have an impact upon what happens in the world, that we can still bring about real social change that improves human lives. And I want to discuss one strategy this afternoon in particular for tackling some of the world's problems, one strategy in particular for promoting social change, which I believe holds great promise but is sorely underutilized. Today I want to talk about what we call, or what we can do actually to increase our influence over world events and potentially have a greater impact and feel perhaps a little less powerless, not through civic participation or voting or supporting nonprofits, all of which are vitally important, but through our money, through our investments, and through our role as investors. I want to speak about how everyday average citizens like ourselves, through our investment dollars, can actually weigh in on and have an impact on some of the great issues of our age and some of the great challenges facing the global community. Although we may not always think of ourselves as investors, most of us actually are, through a 401k plan or a 403b plan at our work, or through an IRA that we've rolled over from a previous employer, or because we invest directly in mutual funds. Money we've saved up, we've asked an investment advisor or a financial planner to help us with. And for those of you who are still students, though many of you may not be investors today, it is likely that you will soon become so, particularly if your first job following graduation offers a company retirement plan. All of us, or most of us, end up being investors of one sort or another. And as investors, we have more power to influence events than we realize, although today too many investors still fail to leverage this power. So I want to talk about how we as investors can actually do that, how we can, by becoming what I call sustainable investors, what we call sustainable investing, how we can actually influence the behavior of corporations, the behavior of markets, and indeed the course of world events. I'm going to do so through the prism of two great global issues which I think many of us care about, and which we spend a great deal of time working on at my company. And these two issues are climate change and gender equality. But before I get to them, let me take just a moment to tell you what I mean by sustainable investing. Sometimes called socially responsible investing or impact investing, sustainable investing simply means fully integrating environmental, social, and governance factors, ESG factors, into investment portfolios. And the reason that we integrate environmental and social and governance factors, the reason we integrate ESG issues into our investment process and into our investment portfolios is because there is a substantial body of research suggesting that such factors have increasing relevance, increasing materiality, to use a financial term. Increasing relevance or materiality to how companies actually perform, to how profitable they become, and therefore to how investment portfolios behave. Research suggests that companies that are stronger environmental performers carry less risk, achieve greater efficiencies, and are better positioned than environmental laggards to take advantage of opportunities in a global marketplace where environmental issues increasingly matter. Similarly, companies with strong employee relations and good workplace practices enjoy higher morale, higher productivity, lower turnover, lower absenteeism, carry less risk, and are better positioned for growth than their less enlightened peers. And companies with better corporate governance practices are less likely to have scandals or blow-ups and are simply better long-term investments than poorly governed companies. And by the way, there is also now an overwhelming body of research underscoring that sustainable investing strategies involve no sacrifice in investment returns. To the contrary, integrating ESG factors into investment portfolios can help mitigate risk and contribute to stronger investment performance over time. The notion that one used to hear, not so much anymore, but still occasionally, that sustainable investing strategies somehow result in lesser financial performance has really been debunked. Companies that do a better job of integrating environmental and social and governance criteria into their business models, companies that are building more sustainable business models, are better positioned than their less enlightened competitors to provide investment performance over the long term. And it is the long term that we should be focused on. One of the great problems in our contemporary financial markets is the excessive focus on the short term. So with that brief description of what I mean by sustainable investing, let me get back to the two issues I was talking about, climate change and gender inequality. In my view, these are two of the great challenges facing the global community over the next few decades. If we get these issues right, they can be key drivers in solving so many other global problems and can help usher in a period of unprecedented economic growth that has the potential to transform economies, cultures, and societies for the better. If we fail, quite literally, the human experiment is in trouble. It's as serious as that because these two issues are as fundamental and as profound as that. Climate change is nothing less than an existential crisis for the planet, for our species, and for many others. The clock is ticking against us, and our collective response to date has been utterly inadequate. 2015 was the warmest year on record since modern record keeping began in 1880, and 15 of the 16 hottest years on record have occurred since 2001. As global temperatures continue to warm, all of Earth's natural systems, air, water, minerals, forests and rainforests, soil, wetlands, fisheries, coral reefs, the oceans themselves are threatened, and many of them are already in serious decline. If we do not reverse course, we will face unprecedented disruptions from increasingly dramatic storms, floods, and other natural disasters, rising sea levels, melting polar ice caps, habitat destruction, accelerating species extinctions, and unimaginable changes to life, including human life, on planet Earth. The potential consequences of inaction are cataclysmic. There is simply no more urgent global imperative than the need to transition from an industrial age economy powered by coal and oil to a sustainable economy powered by clean energy and resource efficiency and new technologies and innovations. This is one of the most profound challenges of our epoch or any other epoch. The other issue that I want to talk about is gender inequality. As you know from my introduction, I talk about this and we work on this issue a lot, and as a result, I travel around the country speaking about it a lot. And I am often asked why, at the end of these talks, why I, as a man, would be so engaged on this issue of advancing women. And that question always strikes me a little bit like asking a white person during the 1960s why they were supporting Dr. King and the Civil Rights Movement, or asking a white South African 25 years ago why they were supporting Nelson Mandela and the struggle against apartheid. Because there is still a system of Jim Crow laws in effect around the world. There is still a system of apartheid in effect around the world when it comes to women and girls. In one place it may be honor killings, in another place it may be genital mutilation, in another it may be young girls being subjected to horrific violence for the simple act of trying to attend school. In another place it is trafficking or domestic violence going unprosecuted and unpunished. In another, it's women not being allowed to drive automobiles. And here in the United States, it is women holding only 17% of Fortune 500 board seats and earning only 79 cents for every dollar a man earns in the year 2016. Gender inequality may take different forms in different countries or culture, but there is fundamentally a continuum of oppression and inequality affecting women and girls around the globe. It is the great human rights issue of our time. It is also one of the great economic issues of our time. In fact, confronting climate change and gender inequality together has the potential to unleash the greatest period of economic growth the world has ever known. On climate, a 2014 World Bank report found that on a number of key policies, none of which even go so far as to put a price on carbon, you could increase GDP by between $2 trillion and $2.6 trillion a year by 2030 in terms of new jobs, increased crop productivity, and public health benefits from confronting climate change. A study by the University of Massachusetts Political Economy Research Institute and the Center for American Progress found that reducing carbon pollution by 40% from 2005 levels would lead to a net increase, of jobs in the United States of 2.7 million jobs and lower the unemployment rate by 1.5%. A 2014 Climate Policy Initiative study estimated that transitioning from coal and gas to low-carbon, renewable electricity would lead to a net economic benefit of up to $1.8 trillion between 2015 and 2035. The transition from an industrial age economy powered by fossil fuels to a sustainable economy powered by clean energy, resource efficiency, and innovation will quite simply unleash an unprecedented period of economic growth. And we have the same opportunity to catalyze economic growth by eradicating gender inequality across the globe. A recent McKinsey report, and by recent I mean literally within the last 4 months, called The Power of Parity, found that if women were allowed to fully participate in economic life equally to men, it would add up to $28 trillion annually to global gross domestic product, GDP. That's the equivalent each and every year of an additional US and an additional Chinese economy. Even in a best-in-region scenario where all countries in a given region simply matched the rate of improvement of the best country in that region would lead to $12 trillion a year in GDP growth around the globe, the equivalent of adding an economy of Germany, Japan, and the UK to the global economy every single year. There could be no doubt that women's economic empowerment would dramatically boost global growth. And now there is also a compelling body of research. I would say it's beyond compelling. I would say it's overwhelming, underscoring that where women are better represented on corporate boards and in corporate management, companies simply perform better and become more profitable. A 2014 Credit Suisse study of 3,000 companies globally assessing the level of women in senior management found that more gender diversity in management coincides with better corporate performance and higher stock market valuations. An earlier 2012 Credit Suisse report reviewing 2,300 global companies found that companies with women directors outperformed those without women directors in return on equity, average growth, and price-book value multiples. A 2011 Catalyst study of companies over the 2004 to 2008 time period showed that companies with 3 or more women corporate directors outperformed those with no women on their board by 84% in terms of return on sales, 60% return on invested capital, and 46% return on equity. I could go on, but you get the picture. When women are in leadership positions, companies simply perform better. Diverse groups make better decisions than non-diverse groups. So can you imagine how much wealth, how much value, how much growth, how much creativity and innovation is now locked up inside of outdated, dim-witted patriarchal structures around the globe? If women were allowed to attain the same educational and economic opportunities as men, it would lead to the greatest economic boom in the history of the planet. So, clearly, climate change and gender inequality demand our engagement. Tackling these issues is not only the right thing to do, it's the smart thing to do. It's where morality and economics converge. So how do we do that? In my view, we don't have to wait for government to act. We don't have to wait for government to lead the way. The public sector, for a variety of reasons, as I mentioned a moment ago, is in various states of disarray around the globe. Capital markets, more than governments, will determine the future of the global economy. We live in a global capitalist economy. Businesses and markets will increasingly be called upon to provide solutions and to lead the way. We therefore need strategies for prodding and pushing and persuading businesses to do the right thing, whether it's mitigating climate change or advancing women or moving forward on a host of other global issues. This is where investors come in. You and I, as I said before, if we're investors, we own these companies. Again, you may not own them yet if you're a student, but you soon will. And you may not be accustomed to thinking yourself as an investor, but everyone in this room either is or someday will be. And right now, when it comes to climate change, when it comes to gender inequality, when it comes to other vital issues, most investors are on the sidelines. In my view, an investor on the sidelines is the equivalent of a voter who doesn't show up at the polls to vote. It's shirking responsibility. It's forfeiting the opportunity to make an impact. It's being part of the problem rather than part of the solution. So, how can we be more responsible? How can we have more impact? How can we be part of the solution? Well, let's start first with gender inequality. How can investors, through their investment dollars, capitalize on what women have to offer? How can we invest in women? So my company has asked itself these questions, and I think we've found a few answers. First, we decided with all the research, which at this point, as I said, is beyond compelling, it's really overwhelming. With all that research underscoring that where women are in leadership, on the board, or in senior management, companies simply perform better, why not identify those companies and invest in them? Is this not an investment opportunity literally staring us in the face? We decided that it was, and so we designed and launched in 2014 the very first broad market index in the world of the highest rated companies in the world in advancing women onto their boards and into senior management. Several months later, in June of 2014, we launched a fund called the Pax Ellevate Global Women's Index Fund that invests in those companies. The very first mutual fund in the world that invests in the highest rated companies for advancing women. In other words, we put our money where our mouth was. We put our money where the research shows we should be putting our money. We invested in women. The index and the fund, as I said, consist of the top-rated companies in the world. Across 400 companies in the index, women hold 33% of board seats versus a global average of only 15%, and 26% of senior management positions versus a global average of only 16%. In the index, 100% of the companies have women on their board, 99% of the companies have 2 or more women on their board, and 77% have 3 or more women on their board. And guess what? You guessed it. It's outperforming the market. For the 2-year period ending in February, the index outperformed the MSCI World Index by almost 4.5%. And as of yesterday, the fund was ahead of the World Index by about 3.25%. And actually over 4% since its inception. Now, in the investment business, we are told to tell you, and it's true, that past performance does not guarantee future results. And investment results may indeed vary over time. But this index and the fund that invests in this index to date have been performing as we believe they would, delivering the stronger investment returns associated with greater gender diversity, more women in corporate leadership, demonstrating in real time with real dollars what the research had in fact predicted, that these companies would do better. So one way to promote gender equality, and this is not an advertisement, there are other products out there that invest in women. I'm using ours as an illustration. It's obviously the one I know best, but this isn't an advertisement. There are other investment products out there, what's increasingly being called gender lens investing, that are launching in this space, giving you the opportunity to do this. So one way to promote gender inequality is to invest directly in companies that are advancing women's leadership. What else can you do to advance gender equality through your investments, in addition to directly investing in the best companies for women? Well, investors really have a lot more power than they often realize. It is ridiculous in my view, and I bet you most of you agree, that in the year 2016, women only hold 17% of Fortune 500 board seats, the largest companies in the United States. But who elects these boards? The answer is we do. Again, we are their shareholders. We own these companies, again, perhaps through an IRA or a 401k plan or a 403b plan at work. But we are their investors, and their investors, their shareholders, elect their boards. Each year, these companies hold an annual general meeting, and their boards are elected at these meetings. And each year, in advance of the annual general meeting, these companies send out a proxy to all their shareholders. And on the proxy is their board slate. And if investors don't get that proxy directly, you can make sure that whoever does get proxies on your behalf, folks managing your mutual fund, your financial advisor, the folks running your retirement plan, they vote those proxies on your behalf, and you can make sure that they vote your proxy in a way that reflects your value rather than simply rubber stamping all male corporate boards. How is this done? It's relatively easy. At my company, we simply adopted a proxy voting guideline, providing that when we receive a company's annual proxy ballot in the mail with its slate of directors up for election, we will not support that slate of directors unless it includes at least 2 women. And in fact, we then not only withhold support if it doesn't, but we register our concerns with the company by writing them a letter, explaining the reasons for our opposition, citing the research suggesting that they would be a better company if they did, urging them to embrace gender diversity on their board. And if we don't hear back from them, we'll sometimes file a shareholder resolution with them. During the last proxy season, we withheld support from 160 board slates because of the lack of gender diversity. And over the last 5 years, we've withheld support from 900 board slates for the same reason. This is a simple step that any mutual fund, pension fund, money manager could take if they wanted to promote gender diversity on corporate boards, and yet the overwhelming majority of them don't. Instead, they simply rubber stamp most, if not all, management-supported proxy proposals, including a company's hand-picked slate of all male directors. What a shame, and what a lost opportunity. If you believe, as I do, that women should be better represented in the boardrooms of corporate America, but you are invested through financial intermediaries or financial plans or retirement plans that routinely rubber stamp all male corporate boards, then you are, perhaps unwittingly, but you are part of the problem, not part of the solution, or at least your investments are. And you might think about switching to a firm that better understands your values and your priorities. My company is also a founding member of what's called the 30% Coalition, the first time institutional investors and national women's groups came together to try to pressure companies to put more women on their boards. And over the last few years, since 2012, through letters and dialogue and shareholder resolutions with companies, we've reached out to 160 companies, and of those 160 companies, 60 of them, as a result of our efforts, have placed women on their boards of directors. We also file shareholder resolutions with companies on board diversity, often in coordination with other institutional investors. And we have filed board resolutions at 8 companies over the last year or so, and in last year, 3 of those companies agreed to appoint female directors. We've also been putting our clout behind efforts to address gender pay disparities and the gender pay gap. Last year, we filed 3 shareholder proposals with Apple, eBay, and Amazon requesting that the companies take action to disclose and report on any gender pay gap within the company. At Apple, we were able to withdraw our resolution because they immediately said, we'd like to sit down and talk with you and work with you on this, and indeed they did. And in February of this year, Apple CEO Tim Cook announced the results of a gender pay assessment within Apple and stated that the company is committed to closing its gender pay gap. Our work on gender pay equity culminated in a letter we sent to the Securities and Exchange Commission just last month, well, in February, asking the SEC to require companies to report on their gender pay ratio on an annual basis, or in the alternative, at least issue guidance to those companies who wish to do so voluntarily. That rulemaking petition is now before the Securities and Exchange Commission, and we strongly believe that disclosing gender pay gaps within companies will incentivize companies to then close those gaps. So investors really can make a difference. You can invest in funds that in turn invest directly in women or in companies that promote women. You can vote or insist that your representative and vote your proxies in favor of gender diversity on corporate boards. You can participate as active shareholders, engage with the companies you own to advance women. There is a range of strategies that you can take to promote gender equality. Investors are not powerless. We can move the needle. And when it comes to gender inequality, it seems to me that it is both a moral imperative and an economic imperative that the needle be moved. So, briefly to climate change. How can investors move the needle there? Well, investors can invest in fossil fuel-free funds. We offer some at my firm, and there are plenty of them out there. Again, this is not an advertisement. But in lieu of fossil fuel companies, you can invest in companies that are developing energy efficiency and renewable energy solutions, water and pollution control solutions, waste and resource management solutions, sustainable food and agriculture, and other high-impact companies whose products and services and business strategies offer positive solutions to global sustainability challenges. And there are plenty of firms in the sustainable investing space trying to direct capital precisely to those sorts of companies. We also avoid investing in companies involved with the most carbon-intensive fuels. We do not invest in coal or oil from tar sands in Canada, and we seek to avoid electric utilities that are overly dependent on coal. We work with other institutional investors through several coalitions to pressure companies to take more action when it comes to reducing, mitigating, reporting on greenhouse gas emissions. We co-signed a letter with other investors calling on the finance ministers of the world's major economy to support an ambitious climate change agreement in Paris this past fall. We have filed shareholder resolutions with companies we own in the energy sector, calling on them to publish annual sustainability reports and to set quantitative, time-bound goals for reducing greenhouse gas emissions. We're also part of several collaborations focusing on engaging with fossil fuel companies on the issues of methane emissions and water use involved in fracking. So, as investors, we are engaging companies in the energy industry and encouraging the energy industry to change in order to reduce carbon emissions and mitigate climate change. And all of these efforts are bearing some fruit. And all of these efforts on the two great issues I'm talking of, two of the great issues of our time, climate and gender, are ways that investors can raise their voice, ways that investors can deploy their dollars, ways that investors can influence corporate behavior, and through corporate behavior influence markets, and through influencing markets can perhaps move the needle globally on some of the preeminent challenges confronting the global community. And not incidentally, we're about to witness a generational transfer of wealth to certain demographics, women and millennials in particular, who care deeply about these issues. Research shows that women and millennials want their investments aligned with their values. They want their investments to provide a fair return, of course, but they also want, and they also consider equally important, that their investments make a positive impact on society. They understand that their money can be a force for good or for ill, and they want their money to be a force for good. So we have two of the great issues of our time, climate change and gender inequality. We have certain key demographics, growing demographics, who want to do something about these issues and can be mobilized to address them. We have a public sector in various states of disarray that's less likely to be timely and effective in addressing some of these issues. We have a global economy dominated by market capitalism and its fundamental unit, the modern corporation. So all of us, in this context, have the opportunity, and I would suggest the obligation, to make sure that we invest in ways that seek to ensure that corporations and markets produce better outcomes, whether it's on climate change, on gender equality, or on other great issues facing the global community. All of us have the opportunity, and I would suggest the obligation, to be mindful in the way we invest, to invest with intentionality, to be concerned not only with financial return, but with where our money is going and what it is supporting, whether it's leading to positive or negative outcomes, whether it is having a positive or negative impact on society, and on the planet. We have a choice in the way we invest. We can invest in ways that reduce greenhouse gas emissions and our carbon footprint, or we can ignore this imperative. We can invest in companies that invest in women and where women are fairly represented in leadership, or we can ignore this imperative. When we can be engaged, or we can sit on the sidelines and hope for the best. By all means, if you are interested in fostering social change, do all the traditional things that we all do to bring about social change. Go out and vote. Support candidates and causes. Run for public office. Write letters to the editor. Join a nonprofit. Drive a Prius. Whatever. Do all the things that good citizens do to try to affect change. But if you don't deploy your investment dollars to impact change, you are perhaps leaving the most powerful arrow of all in your quiver. It is simply no longer tolerable that our money should be disconnected from our values. Our money, our investment should be aligned with our values, should be aligned with our aspirations, should be aligned with our ideals, should be aligned with our goals for our children and grandchildren. Over the next few decades, it seems to me our task will be nothing short of ushering in a sustainability revolution equal in significance to the industrial revolution that ushered in the modern period. If we are to be responsible global citizens, we must hasten that change. And to hasten that change, we must become responsible investors. We can be part of the solution, or we can be part of the problem. We can hope for change, or as Gandhi once said, we can be the change. By becoming a sustainable investor, you can be the change. I hope you'll consider doing so. Thank you very much. Thank you. Now I understand we're going to have some questions. Mike?
Yes. We'll start right here.
Hi. So I'm Mac McCabe. I'm the only main member of the Social Venture Network, which is the grandparent of most socially responsible business movements. And next week I'm going to the conference in California. There'll be about 400 people, a lot of friends of yours, a lot of friends of mine. And the biggest subgroup that will be growing are people who are doing something what I will generically call impact investing.
Mm-hmm.
About half of them I don't trust. You know, I see them as market opportunists. There's you, there's Matt Patsky, there's Amy.
Am I one that you don't trust? Or
No. You're one of the good. Yeah, you know how I feel about you. How do you figure out who the opportunists are versus the people like you in the world who are actually doing the right thing?
Well, you know, I'm asked a version of that question a lot. When you talk about, for example, when we were talking at lunch today with the students, I was talking about how what I've really noticed is different today. I said it's not just the Paxes of the world that are doing sustainable investing, but now a lot of the big money managers are getting into the space. Goldman Sachs and BlackRock and Morgan Stanley and Merrill Lynch. And I'm often asked, and it's a version of your question, well, how can you distinguish the real thing from the false? How can you distinguish the real deal from greenwashing or from, posing and so forth? And I think that's always a legitimate question. But I also think the fact that the BlackRocks and the Goldman Sachs and the Merrill Lynches and the Morgan Stanleys feel that they need to be in the space itself is progress. And you know what? In any space, you're going to have a continuum from dark green over here, maybe it's the Paxes of the world, to light green over here. That's good. The fact that they want to get on the light green end is good because they're going to travel up along that curve over time, and their investors and consumers are increasingly going to insist that they do. And so I think it's the same with impact investing to some degree. I think, are there some that are just doing it because it's more sort of marketing, smoke and mirrors to try to attract capital, and it's really only sort of a pretty blasé business? Of course. But over time, I think the fact that so many businesses now believe that they need to make the impact case, that they need to communicate with their various stakeholder constituencies, investors, consumers, capital and so forth, by speaking the language of sustainability, in and of itself is progress. So we're on a different playing field. And, life is such, not everyone is going to be as good as everyone else. But I think if we can continue to raise the bar, that's progress. And that's usually the way progress occurs. It's sort of gradual. So, there's some people in my industry who don't like the fact that Goldman Sachs and BlackRock and Merrill Lynch and Morgan Stanley are in it. I think it's a good thing. And I think the role of the Paxes of the world in that context, in the world of the Matt Patskys and the people you're talking about of the world in the impact investing community, is to hold them to higher standards, to continue to innovate, to continue to lead, continue to raise the bar, and then we get into maybe a pretty virtuous dynamic where we're going in the right direction. So I don't want to be sanguine about it or Pollyannish about it, but I think it's a good problem to have. Another question, gentlemen.
Thanks for your thoughtful remarks, which covered a lot of important subjects. But one I wish you would have paid more attention to is when you're making moral judgments, is the intrinsic trade-offs. For example, I think you cited a study that said that there would be a $2.5 trillion increase in US or world, who knows, GDP, if only we use sustainable energy. We here in Maine have a problem of having very high energy costs, the 12th highest in the country. We have a woods industry that's in trouble. We have people who want to promote wind and other solar and other nascent industries that are high, no doubt good for the environment. But if we're 12th in cost now, we'd be even higher if we went to a substantial increase in those so-called sustainable energy sources. You could say, well, that's worth the cost, but there is another cost, which is the loss of jobs in other sectors. So what was missing from your analysis was any sense of the trade-offs between what we gain and what we lose, and how we make those judgments. And I wondered if you'd care to comment.
Sure, gladly. I think you're right, and I apologize if I didn't focus on it as much as I perhaps should have, but I do think in periods of change like this, the great economist Joseph Schumpeter talked about creative destruction. Anytime you go through a period of change like this, there are not only trade-offs, that arguably is even euphemistic. There are real dislocations that result. There are industries that disappear. The computer put the typewriter industry out of business and so forth. And that's the way and so I do think one of the problems I pointed to, though, is part of the culprit here. If you're going to go through a transition of this magnitude, if you're literally going to, over a fairly condensed period of time, a few decades, move from an industrial age economy powered by older power sources to a more sustainable economy powered by more renewable power sources, it's going to be difficult to do that if government's not a partner. Because as people lose their jobs, you need to invest in people, you need to invest in education, you need to invest in infrastructure. And when government is not doing it, it's literally not doing fiscal policy, it's not doing tax policy, they don't even pass budgets anymore. They just roll over the previous year's budget in Washington, D.C., basically. When the economy now, we don't have fiscal policy, we have monetary policy. That's why everyone watches what the Fed does every day, because we don't do real policy anymore. So if government's not there with investments in job training, investments in education, investments in infrastructure, investments in helping not only individual companies, but whole industries through this transition, then it's going to be more difficult. Then the trade-offs you talk about are actually, that becomes a bit of a euphemism, and there are real dislocations. And I get that, and I don't pretend to have all the macro answers for that, but I do think it's a very serious problem. I don't think it's a problem that markets in and of themselves can take care of without government being a partner, without some kind of functioning, vital public sector. And that's a problem in this country right now, to be frankly.
Hi, my name is Heidi, and I've been active with 350 Maine in the divestment and also the anti-tar sands stuff. I'm wanting to know, and I've followed stuff going on with the COP21, and I'm very concerned about all those indigenous cultures who have been swept by the wayside and forgotten by most of the countries. And I'm wanting to know what, and the frontline communities who are losing their communities due to climate change and the fossil fuel industry, such as those in Alberta because of the tar sands. And I want to know, first, what can we do to help maybe champion the foundation of a global fund that we can force the gas and oil companies to pay into for their karmic loss of these cultures. And the other thing is that if we talk divestment, and we don't give any kind of real solutions for how individuals like you're talking about can really functionally divest and reinvest. So I'm wondering what we can do to really found something nationwide, where a network where people who can call in a hotline and say, hey, you know, Bernie supporters who want to be able to get on the horn and say, what can I do and who can I call locally that can help me do exactly what you're telling us to do?
Don't get me started on politics, please. No, so the first part of your question, though, it's true. It's not just the fossil fuel industry that's had an adverse impact on indigenous communities, indigenous cultures. It's at some level the march of progress. It's market capitalism and so forth. And it's one of the issues we look at. When I talk about environmental, social, and governance, the S there, the social, looks at a lot of issues: supply chain issues, labor abuses, human rights issues, child labor, interactions of companies with indigenous communities and what they're doing with indigenous communities in terms of employment and training and so forth. So we actually do look at those issues. And most of the sustainable investment firms that you refer to, Matt Patsky, the Trilliums and the Paxes of the world, the Calverts and so forth, that are in this space, have worked on that for some time. When I was on the board of there's an organization called US SIF, Sustainable Investment Forum, which is sort of the trade industry association for all the asset managers and investment advisors and so forth around the country that do this type of investing. When I was on the board of that, I actually started a committee called the Indigenous Peoples Working Group so that we could bring more attention to this issue within sustainable investing. I founded that committee. I was on it for about 3 or 4 years. And that committee is still around, by the way. And so, you know, I do think we have some impact at the margins, but again, it's another issue where, you know, government has to be a partner. You know, asking Coca-Cola to go into a country and have Coca-Cola be the sole responsible party for dealing with the issues of the indigenous. Coca-Cola can do some things. And Coca-Cola, by the way, is doing a lot of things on one vital global issue that's very tied in with its business: water and clean water. And they've become a leader in clean water. People tend to think, oh, big bad. They're doing some good things. Like most companies, like most people, they're imperfect. They do some good things, they do some bad things, just like all of us do. But on water, they're great. But on indigenous cultures, it's almost too much to ask Coca-Cola to go in a region and come up with all the solutions. Coca-Cola, though, companies like Coca-Cola, I'm using it really generically, not specifically now, big major corporations that are working globally around the world, they're increasingly under sort of a 24/7 media spotlight. in this new age of social media and 24/7 news cycle, where in an age where their brand is very much tied into their reputation, they are under increasing pressure to do the right thing. A bad PR day can be hell for their stock price. So, and a lot of these companies are made up of people like you and I. It's not like that the CEO is an evil person. It's just that maybe indigenous people or water or putting women on his board hasn't become one of his priorities yet. As I said to students earlier today, I'm a CEO. I understand that. I go up to the office every day and I've got 20 things to do and I only have time to do 5 of them. So I've got to figure out which 5 are my priorities. So it seems to me that that's the job of investors. We have to make sure that these corporations know what our priorities are. Is putting women on their board a priority? There's a way we can register that concern. That's what my talk was about. If indigenous people's rights is a priority, there are ways we can register that concern. If reducing greenhouse gas emissions is a priority, we have to try to make that the CEO's priority. At some point, companies and their boards are there solely to represent shareholders. At some point, they have to listen to their shareholders. And as I said, who are their shareholders? It's us. We own these companies. So if we don't take the responsibility for changing their behavior, I honestly don't know who's supposed to take on that responsibility. It's not the other guy's problem, it's our problem. It's our responsibility. And that's what we have to do with our investment dollars.
More than 40 years ago, in my youth, in 1974, I co-founded an organization called the Women's Campaign Fund to elect more women. And at that time in our American history, it was bipartisan because we had different kinds of Republicans than we tend to have today. At any rate, snap forward all these years later, the percentage of women, by the way, at that time in the US Congress was under 2%. Today it is 20%. That's a little better than 17% on corporate boards, but it's not good. And so I'm wondering what you think about if we must get government on board, why don't we elect more women? What do you think?
I'm in favor of that. Well, seriously though, let's just go back to the research I cited a moment ago in the corporate context, okay? That diverse groups make better decisions than non-diverse groups. The research is actually deeper than that. What the research shows is that when you have a critical mass of women on a leadership team, and you hear these 30% club in England, there's a 30% coalition that I mentioned in the US that we're part of. When you get to a critical mass of women on a board, 30%, board behavior changes. The discussion is more collaborative. Additional questions are asked that weren't asked before. The sort of good old boy go along to get along sort of mentality starts to break down. The board starts to ask for more substantiation, more documentation, more evidence, and their behavior changes and governance improves. It seems to me that analogously the same thing would happen in the US Congress. So yeah, I do think we need more women in public office. Yeah. Yes.
Hi, Robert. Question on free trade. It's being spoken about on the stump in this election cycle. As I recall, about the last 4 or 6 presidents, regardless of party, have been pro-free trade. And one statistic I've read is that 2.5 million jobs in this country have been lost, or something in that area. I would probably suggest both men and women. So in general, from your perspective, do you have any comments on free trade, good or bad, and specifically on sustainability? Is free trade good if we're moving stuff all over the globe from one nation to another?
Well, you people really want to ask me political questions, don't you? Yeah, I thought by the end of my talk I maybe had you, and by the time I leave here I'll have like half of you with me and half of you hating me. You know, I'm not an expert on trade. You know, I run a mutual fund company, I'm an investment company. Obviously, I'm a citizen, so I have some views. I have read both sides of the debate on whether free trade has actually resulted in a net gain or net loss of jobs in the United States. because of this new trade agreement, I've actually of late been reading up a little bit on sort of more historical stuff about NAFTA and what really happened there. And I don't pretend to be an expert. I don't know if I can come down completely on one side or another and say why those opposed or those in favor are correct. But it does seem to me that it is a mixed bag. I mean, that's what trade is. That's what, when currencies are higher or lower, one country loses and one country gains. One country exports more and one country imports more. To some extent, free trade agreements are supposed to be focused on trying to to address and to regulate and to mitigate those anomalies. Have they been completely successful? Of course not. But the alternative to trade agreements concerns me. In a world where there were no multilateral or bilateral trade agreements and everyone was on their own, that strikes me as a world that would fast go in the direction of protectionism and tariffs, higher tariffs, and trade wars, and currency wars. And that's not where I think we want to go. Have our trade agreements been perfect? No. Can they be improved? Yes. Should all trade agreements have environmental and economic protections in them to some degree? Yes. Should labor be at the table? Yes. I get that they need to be better. But the alternative to trade agreements, in my view, is not no trade agreements. That's a worse world than the one we're in.
Yes, my name is Bonnie Vertaler, and I have two questions. One is there some easy access to information that you referred to early on in your talk that would enable us to convince other people that investing in socially responsible companies is a good investment and that they are doing well? Is there a page somewhere on the website that says, here it is, take a look?
Yeah, no, thank you very much. It's a good question, and as is the case with many things, the information is sort of dispersed, and it's not completely organized. It's not like one place you could go to and on 1 or 2 pages get all the best information, but I would say this. There are good places to go. First of all, some of the companies in the space, not just our company, but other companies in the space have very good websites with a lot of information on them. For example, on our website, a lot of the study, I just cited 2 or 3 of the studies on women on boards and 2 or 3 of the studies on how sustainable investing can actually add value. But there's a lot of research, and you can get to all of it, like, for example, through our website. The organization I mentioned called US SIF, which is ussif.org, which is a trade industry association. It's a pretty good place where you can get a lot of information about sustainable investing and some information about sort of the rationales for it, some of the research and so forth. And, on certain issues too, there are, for example, on climate and what businesses can do about climate change, not just what government, but what businesses can do about climate change. There's an organization called CERES, C-E-R-E-S, which stands for the Coalition for Environmental Responsible Economy. But CERES, C-E-R-E-S.org, is a treasure trove of all the best information, it seems to me, all the best research and data and news about what corporations are doing on climate change. So there are places like that you could go, yes.
Okay. The other question is, it seems like your company is sort of applauding and rewarding the companies that are doing well. Is there anything that we can do with our investing to support the startups who are just struggling?
To support startups?
Mm-hmm.
Yeah. Well, so because we're a mutual fund company, we invest in publicly traded securities that are already on the exchanges and so forth. We're talking about impact investing and social venture network and so forth, which is more involved with private equity and venture capital and startups. So there's something called the social venture network, which is a bunch of investors who are sustainability focused that come together and try to support younger stage companies, startups and so forth, and try to raise capital. There are also some angel investor networks now around the country with venture capital networks with more of a focus on sustainability. It's not our sort of end of the industry, so we don't actually do that at Pax World, and I wouldn't be the foremost expert on it. But that stuff is accessible. I would say that starting with social venture network is a good way to start to learn about the space. And there are some other there's a angel network in the Boston area, but it's not just the Boston area. I think it's more national, even global now. I think it's called Golden Seeds, and they try to raise money to invest in startups of companies owned by women. And so there are various networks to focus more on sort of the private equity, venture capital, venture capital and early stage financing of sort of social ventures that are out there now, yes.
Joe, we have time for one more question.
Okay.
My name is Micah Glenn. I'm a sophomore at University of New England. And I was wondering, I remember during this speech you talked about boards and businesses with women on the board that are doing successful. And I was wondering that if these businesses started doing poorly, would you still recommend us investing and going to more towards boards and businesses with women on the board, or is that simply because they're doing successful right now?
It's a really good question. So most of these things play out over time. So for example, if you take too short of a time period, and our markets today, for the most part, are way too short-term focused, and you try to prove that, well, this company is either performing better or worse because of women on its board, or frankly, because of anything else, because of its price-earnings ratio, or because of its cash flow or whatnot, I think you're sort of playing a fool's game at that point because your time period is too short and you really can't see the results of good corporate governance. You can't really see the results of really good environmental practices. You can't really see the results of corporate diversity, of diversity on boards and so forth, except over a longer-term time frame. The other thing that's relevant, no matter what, you always still want to be diversified. I mean, I'd be the last person to say you should go just buy 2 or 3 stocks and hope for the best, because if you buy 2 or 3 stocks, you're just not broadly enough diversified, and you're carrying way too much risk. If one of them goes down, it could wipe you out. So most investment portfolios, are more broadly diversified than that, and that's of course the whole reason for mutual funds in the first place. And through that diversification, yeah, so some of the companies that might have great board diversity, they're still going to, in certain periods of the marketplace, underperform for other reasons. And you're going to have to go through those periods of market turmoil. But most of the research suggests that over time, and most of these studies that I cited are sort of longitudinal studies that look at companies' behavior and stock price performance over 5, 7, 10, 15-year terms. Most of the research suggests that over time, notwithstanding some volatility during shorter time periods, that these companies will perform better. Now, at some point in time, we are going to reach a point where women are no longer underrepresented on boards, that there's full equality. And at that point in time, if we get there, and I hope we will, and I think someday we will, this opportunity that you have of investing in the companies today that are better for women will disappear, right? Because all companies will be good for women, and that, what they call arbitrage in my business, that opportunity to play the market and find companies that are positioned to do better because they have some advantage, will disappear. But right now, while women are still underrepresented in corporate leadership, you have an opportunity to profit from that by investing in companies where they're better represented. So over time, that gap will close, and that investment opportunity will disappear, and that will be a good thing. That'll be a mark of success. But in the meantime, we can help hasten that closure. We can help accelerate progress, it seems to me, by investing in companies that do better by women, because as their stock price performs better, they'll attract more capital. As they attract more capital, that, again, helps their stock price. And again, you create sort of this virtuous circle. And that really is the way markets are supposed to behave, isn't it? Markets are supposed to attract, money is supposed to be attracted to the companies that have the most capacity for delivering the best returns, and money is supposed to go away from the companies that are problematic. That's the way markets are supposed to work. And I'm suggesting to you here that when it comes to gender diversity, there's an opportunity for markets to work much more perfectly. And the opportunity is by investing in companies that have women better represented in leadership. So thank you again very much. Nice to be with you. Thank you.
Joe, on behalf of UNE, thank you for being here today. It's a wonderful day.